What's going on, guys? Welcome back to the channel. Now, in yesterday's video, if you guys remember, we were discussing exactly what's happening right now. We were looking for more upside in this market, and that's exactly what we got. Using our Elliott wave analysis, it guided us to forecast the possibilities of this move. So if you missed that video, it's right over here. So I do encourage you guys to go take a look at it, because I also go in a little bit of a lesson of what the impulse structures and the corrective structures look like to confirm a possible move to the upside or to the downside. Now, with that being said, I do feel that this market will continue on higher, but we also have to be very mindful of the alternate scenario, which is the bearish move, right? So in this video, what we're going to do is that we're going to touch base on this, on the SPY chart and the triple Qs. I also want to touch base on this one chart that I am extremely worried about, because it is not displaying the same characteristics and the same wave structure that we see from the SPY and the triple Qs. And I mind you that this chart is a big industry group within tech, so it does carry some heavy weight, and we want to see this chart progress like we see here, the SPY and the Qs. All right, guys, so let's dive into the analysis. So in here, what we're looking at is that the markets will likely head lower in this case, right? In this scenario, we want to see price action continue on higher ever so slightly to be, so that wave C and the zigzag and the ABC of wave 2 can be equal to the wave A. So that normally is what happens in the zigzag. When you have wave A completed, wave B, wave C will equal to the length of wave A. So this here will bring us to just over 400, which is bullish in and of itself, right? So the higher we go, the less likely that the market will continue on lower within this bearish count. All right, so just keep that in mind. And the way we're going to unfold, should this be the count, is that I see this market ending in a ending diagonal, which is a triangle at the end of the cycle, right? The wave C in this case. So we in this instance, right? The guidelines do allow for overlap within the subwaves, right? So wave 1, 2, 3, 4, and 5 can overlap in the ending diagonal to meet at the apex before the breakout to the upside. All right, so we're gonna wait on that. We're gonna see what happens around here, but the further up we go, like I said, it is a little bit bullish. And now let's go over to the bullish count, as we are just now mentioning that. So it is also good to transition over to it. So let me just delete this for a second, and then let's go turn on our wave structures. Now, as I mentioned yesterday, right, we are looking for this to be the 1, ABC to the 2, 1, 2. We're looking to be within the wave 3. The wave 3 upside resistance comes in at 403.64. If we manage to get up to that zone, right, especially since we have tech earnings being kicked off by Netflix at 4 o'clock, which I want to catch that, because I think I may play on options on that. I'm not sure. I'll wait and see, and I'll review with you guys tomorrow on that. But we want to see if markets will be bullish and what outcome those earnings bring to us. Now here, guys, I want to zoom in here because I want to touch base on this, right? We pulled back into the 50%, 61% vicinity, right? And then we're impulsively heading on higher. We gapped up, and now we're looking to see if the wave 3 of wave 3 completes. So now this little wave 3 here will come in at, let's take a look. We still have a little bit more ways to go. We have up to 399, which comes in confluence with the bearish count at 401, around that range, right? It can't always be perfect or a set number. We always call it out in ranges. So the 399 or 401 is that zone that we're looking for, a possible resistance, so the markets roll over. At which point, let me give you another lesson here. At which point, should we get up here, we want to see this wave 4 stay above this wave 1. All right, because per guidelines, Elliott wave guidelines, we cannot see the wave 4 overlap in price action in the wave 1 in the motive impulsive trend. It can in the ending diagonal or leading diagonal, but not in the motive impulsive, which is this 5-way sequence to the upside. All right, so we want to stay north of 389.30, which is the high of wave 1, if and when we make our journey up to the wave 3. All right, guys, so that's that. Let me know if you guys have any questions, because the markets are still open. I want to go over this with you quickly and not take much of your time, because I do want to be mindful of that. So over to the triple Qs ETF, it's the same deal, guys, same deal. We want to see the markets make the 1 ABC to the 2, 1, 2, 3, right? Let me just label this with us right now. So we up in 1, down in 2, up in 3, 4, and 5. Okay, to this wave 3. Wave 4 must remain north of this wave 1, which is at 296.05. If we manage to stay above that, as you guys can see, we broke above this major resistance zone. Now, is this a bull trap? If we go up to the daily time frame, and let me zoom in here, if this candle, I'm just gonna do this real quick with us, right? If this candle, let me just zoom in, whatever, if this candle closes at the end of this week below all these wicks, and we create a wick such this, where is this line? Here we go. Oh, here we go. Here we go. If all right, you get the idea, right? So let me see. Let me just show you real quick here. I don't know why it's snapping like that. So if we manage to close low with a wick on top, right, that's going to call for a bear region, right, guys? I don't know why it's not letting me, so I do apologize for that. I'll get back to you. But if we manage to close this around the zone, let's call it 295, right, 295 through 295.07, okay, that means that we'll be closing around this area, okay, this zone over here right below it, and this will be a bull trap region where the bears managed to fake the bulls to the upside and then pull price back down and then head on lower. Now, the way to confirm that is at the end of this week, if we close right above it or below it, we want to stay above the wave 1 at 296. Okay, guys, so keep that in mind for future reference. Now, what are my upside targets to the wave 3, you may ask? So here we go. So we take an extension from wave 1 to the wave 2. We see that the extension calls for about a 305.04 in the Qs. All right, so wave 3 will likely take us north of 305.04, at which point we want the wave 4 pullback to stay also above this wave 1. All right, like right over here, which in return is confluence with all these resistance zones, right? This one and this one resistance, and now likely will be support. All right, so keep that in mind. Now to the chart that I am looking at that is giving me a little bit of concern here, and that chart is easy, the SMH, the Semiconductor ETF, which is a big industry group within tech, and this is a chart that we must pay attention to because this chart is perfectly channeling to the downside. As you guys can see here on our daily time frame, we have the wave 1, right, and we're looking for the wave 2 to complete at the break of this trend channel. Now we are ending within an ending diagonal, right? We have the wave A. Right, let me just draw this for us here. We have the wave A, the wave B, and we're looking for our final C wave, right? Within the C wave, we have 1, 2, 3, 4, and 5. Now, how is this different than the triple Qs or the SPY? This zone here, guys, this area is not unfolding in 5 waves, rather in 3. As you guys can clearly see, if I zoom in, okay, if I zoom in, this is what is concerning me. Let me do this here, right? So we have wave 1, wave 2, and wave 3, or A, B, and C to the wave 4. All right, now that's concerning because we want to see 5 waves to the upside, not 3. If we dissect this even more into the 1 hour time frame, all right, and we reset this, even if we call, let's take a look, even if we call, which is a possibility, right? It's always possible. Even if we do this, the 1, A, B, C, 2, 3, 4, and 5, where this is the 4 and this is the 2, it's a little bit skewed and does not meet the guideline of the right look and the guideline of alternation, right? So this will be a little bit too prolonged of a wave 2 and does not meet the time and distance, right, time and distance of the wave 4. So we can't make these two corrections pair up to one another. In this instance, it's not mandatory, but it is a guideline that we follow, right? And if we can sort of check that box off, then we have to be very careful. Now, another thing that is keeping me worried is that because we have this in a 3 wave, if we take a look at our RSI, we see that normally we see divergence in the wave C or wave 5, right? In this case, we only have a wave C, right? We only have a wave C if assuming that this is the A, B, and C of wave 4. Guys, this is not looking good. I want to see this market or this ETF head on higher, make an RSI higher, right, and make the resemblance of 5 waves to the upside. Okay, guys, so this is the one that I'm worried about because of this reason. Divergence, 3 wave to the upside. Can't dissect the 5th wave here, or can't dissect 5 waves to call this a 5 wave completion and that June 17th or July the 5th in this case was our low. All right, guys, so be on the lookout for this because it is important, very, very important, that we not fall and not break south of, let's see here, 209.93, which is the high of wave 8. We cannot break south of that. We have to maintain this high. We have to keep on pushing and break this trend line and break this channel. All right, so for that reason, guys, keep SMH, the semiconductor ETF, on high alert, because this is personally what I'm worried about. All right, guys, so thank you so much for tuning in. I hope this was helpful. Let me know down in the comment section if you guys want to see Bitcoin technical analysis, because it is breaking out at this point in time. Ethereum is also doing very, very well. The crypto market on the whole is probably recovering. Maybe that sentiment is going to spill over into the equities market. So as always, thank you so much for tuning in. Appreciate it. Tune in for the Netflix earnings tomorrow. I'll see you guys later. Take care.